You can turn any good company into a bad investment and vice versa. So there will be a price at which point these things look interesting. The inflation genie popping back out in the early 2020s, and you're looking for a store of value. You don't need the US market to collapse for other things to do well.
I think what we should talk about globally, if we may, first of all, the US stock markets have done extremely well, haven't they?
This year, yeah.
Well, considering the bad start they had, right?
Yeah, they have. I mean, I guess the odd thing this year is they haven't actually been the only game in town, though, which is, I guess, interesting. That I think the best performing market this year is Hong Kong of the majors.
Yes.
I think.
Yep.
And Brazil and Canada are ahead of the US, and I think the UK is actually giving the US a run for its money this year for the first time in a while. The US has rallied strongly, but it hasn't been the only game in town. Whether that's the change that lots of value hunters have been waiting for, praying for, hoping for, don't know. Maybe. We'll see.
One of the things that you were spot on when we last spoke about 6 months ago, Russ, was the fact that central banks were going to play a leading role, and we've had a number of cuts in interest rates. But I think there is a problem currently now that we are seeing governments or politics intervening in central bank policy, which I think is possibly dangerous. What are your views on it?
We've seen... I guess the question is if you really believe in... Some people don't believe central banks are independent anyway, even if they technically are.
Oh, right.
And there is a history in the US. LBJ lent very heavily on William McChesney Martin in the 60s. Nixon lent even more heavily on Arthur Burns in the 70s. And the Fed governor then, Burns, cut interest rates far too early. When the inflation genie was out the bottle, they thought they got it back, and out it popped again, and then there was real trouble. And then you needed Paul Volcker to sort out the whole mess with interest rates in the double digits. So it's not unprecedented for that to happen, but markets certainly don't, and certainly markets don't like it when they think it's overt. I mean, I'm not being funny. Lots of people obviously voted for President Trump and like the fact that he gets things done. But when you start firing public officials and leaning on central banks, that's the sort of thing you expect to see in developing markets, not developed markets. And that's probably one of the reasons why the dollar's been going down this year. So it has been, and maybe one of the reasons why the US equity market hasn't been the only game in town, and also why US government bond yields have ticked up a little bit, even though the Fed's been cutting rates. So there are no free lunches, even for those people who are ruled by social media.
No. Gold record levels, $3,800 an ounce.
Yeah.
It's up 40% on the year, which has beaten pretty much any indices at all. The S&P is, I think, about 15% up. US, 80% of its reserves in gold, which I never realized. The dollar's having its worst year since 1973, which I also find interesting. And 20% of global assets are in gold. I had no idea how important gold was. Educate me, please,
Well, the
Russ.
price has shot up, which explains that percentage. Why is gold doing well? I think it's an issue of the inflation genie popping back out in the early 2020s, and you're looking for a store of value. You're looking at something where supply grows very, very slowly relative to money supply and government's ability to conjure money out of fresh air. And I think the issue, I know we've got another US shutdown debate discussion coming up. We've got the British Chancellor of the Exchequer tying herself in knots, trying to get her spreadsheets to add up. The French, as soon as they try and do something to get the numbers add up, everybody's out on the street. So politically, it's a really difficult situation. Economically, it's not
a
ideal.
labyrinth, isn't it?
Yeah. So in the end, the welfare bills exceed taxation income, and dealing with that is so either you raise taxes or you cut welfare. Neither are politically acceptable. So what's the solution? Well, you inflate your way out of it. You try and grow your way out of it, which you give credit, I think, is what, if there is a Trump plan, it's what Trump and Bessent are trying to do, and I think it's what Chancellor Reeves is trying to do. But if there was a lever you could pull, then they've been pulled by a lot of other smart people by now, but they're trying. Or you start using financial repression and try and sit on interest rates, or even you just print money, which I think is kind of what the gold and silver price is telling will be the end game, that there will be some form of yield control, financial repression, or quantitative easing just to make the debts manageable, because the political and public appetite for a financial solution is kind of nil.
And it's also what, in the old-fashioned way, we'd call a flight to quality, wouldn't we?
Yeah, I think...
In a strange way.
Yeah, I mean, Warren Buffett would argue no, because he says gold is this inert metal that, people dig it out of the ground and then they go and bury it in a vault and it doesn't actually do anything. So he would say, I'm not in the least bit interested. But equally, gold miners, when they go well, do generate cash. And it's interesting, all of the gold prices are record high. The GDXJ, the VanEck Vectors exchange-traded fund of 20 or 30 leading global miners, I know it's doubled this year, but you look at the chart, it's just come out of a 15-year bear market. I mean, that doubling barely reflects on the chart.
So, having said all that, what did you feel if you were I guess you were a sentient human being at the time, when Labour, when they came in 1997, decided to grant independence to the Bank of England? Was that a good move? Because I wasn't aware there was a problem. But
no, it was seen as a good move because it kind of took some of the politics out of it and was widely lauded. I think it was partially sort of laying the groundwork for some of the ERM business.
Didn't we quite enjoy, I'm sorry to interrupt, but we also quite enjoyed, well, I did, the Ken Clarke conversation with the governor of the Bank of England at the time, and it was very open house, and you got a rough idea without any trade secrets. Was that not enough? Probably not.
I think we still get the minutes. We get to see who's voted and how they voted and what their concerns are. So there is an awful lot of transparency there, and sunlight's the best disinfectant. So we are fully aware of what they're doing. I don't necessarily envy them in that we have this debate over the quality of data, which is legitimate, isn't their fault, but therefore they're having to deal with data that may not be ideal. And the danger in which I think that they face is they're trying to use either faulty and certainly historic data when they're trying to set the cost of money for 24 months hence. And I think that's and I know they can't just be seen to be sitting there going, well, we feel this is kind of right. So they have to show that there is a framework, and the framework is provided by the data, but the data is potentially no good, and it's certainly backward looking. But at least it gives them a pretext for, well, we did get it wrong, but at least we got it wrong for the right reasons.
Also, from 20 years ago, am I right in assuming that central banks are much bigger holders than they were then? And therefore they provide the liquidity and the movement.
Chinese have been falling over themselves to buy it for most of the last 3 to 5 years. Again, that's part of their dollar. Again, that's part of the Trump. He's put their noses badly out of joint. Again, you can argue there are some legitimate issues there, but they're not very pleased. They're looking for ways of reducing their reliance upon the greenback, and that's one of them. And you mentioned dollar weakness going back to 73. Traditionally, and the past is no guarantee for the future, weak dollar, good for commodity prices because they're priced in dollars, makes them cheaper for people to buy. Yep. It's also generally reflationary for the world. Strong dollar is disinflationary, and a strong dollar also traditionally good for emerging markets because they tend to borrow heavily in dollars. So the dollar goes down, it makes it easier for them to service the debts. So in that respect, again, we've talked a lot about the US having been the only game in town for most of the last 15 years. The CRB commodity index is at about a 15-year high, gold's at an all-time high, and emerging markets are bobbing back up again, and China's just at a 10-year high without anybody noticing. So there are other things happening around that aren't just US-centric, that because people are so focused on the US, they might be missing things that are cheaper and perhaps more interesting and maybe have a little bit more longevity to them than they were. Because the US, for all that it's been a brilliant market and that betting against America is generally a bad idea, you look at any traditional valuation metric for the US, historic PE, forward PV, PE, EV, EBITDA, case Shiller, market cap to GDP, the US is in the top 10% of all time. So good luck if you really think the next 10 years are going to offer you the same returns as the last 10, because you're going to need something really amazing to happen, at least in terms of monetization of AI and other things, which we can probably come back to.
Okay.